Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for the evening, and we're now on September 15th, halfway through the month of September 2021 at about 6:10 p.m. Central Time. So let's talk about today's big rally. We had a nice rally in the stock market. I call it a relief rally. You've been down so hard to get a big bounce, fine. Is the trend changing? Well, you look at the charts with me, you make up your own mind. I'm not quite seeing that. I see a bounce, and then I see wild potential coming on Friday as we get triple witching day, so the futures will expire in September, options go off the board. You get everything going a little bit crazy here. Be ready for that. And then maybe it's all out of the way and we can get back to normal trade. Energy prices have been exploding. $75.50 in the Brent, $72.70 in the crude. What's going on? Name's Ida, name's Nicholas, still damage from those two, and that damage takes a while to take care of. I read a report, and I put it in my daily reports for my clients. Do you know how many ships there are waiting to unload in the, on the West Coast? And I'm talking California at the big ports. 60. There's another 20 coming in. They can't get the product off the ships quick enough. And when they do, I was reading, I couldn't believe it. It's an average of 8.7 days for it to be picked up out of there, and then it's something like 11 more days to start movement. It's nuts. Why is that taking so long? Lack of drivers? Could be. Lack of operators? Lack of personnel? I don't know. I'm not an expert on that. But boy, somebody should be looking into what's going on there. It seems to me very inefficient. And I'm not an expert in it, so don't beat me up on that. But it just keeps expanding in what it's doing. And how many of those goods are going to help us take that supply chain problem away? I think that's all important. All I keep hearing from my friends that run huge companies, they can't get their products. Be it my friend that's in the meats, be it my friend today, I went to a factory that makes those huge barrels, 275-gallon barrels for chemicals, and then they make, you're on drive on the highway, if you hit something, they put up those type of barrels as well. That'll be their other product. But to make a long story short, they can't find the used barrels that they need to refurbish, so they have to continue to create new ones. Well, it's not easy to get the pellets and everything you need to do it. There are supply issues everywhere. I saw it today in a beautiful factory. Okay, yeah, I do take a break every now and then, run out for an hour or two, go with my pals and do whatever. You can't look at markets 24 hours a day. If you do, you're going to be in a loony bin. When we look at this chart, I want to step back and say what I have been saying, and people aren't getting this. Markets get corrections. That doesn't mean the trend has changed. Does this look to you on a weekly chart like the trend has changed? If it does, write me, call me, explain to me why it has. Because as a chartist, I'm just not seeing it. And these are charts of just closes. I see a correction. You and I aren't blind. The market right here was 45.34. It sank back here 1.68%. last week from the all-time high close, and it's made back 0.58. It's down 1%, and people are jumping and saying, oh, that's it, that's the top. Why? As a chartist, why? I see a correction. I get it. I am a guy that was actually bullish up here and wrong. Okay, that doesn't mean the bigger picture is over. This market's in a corrective phase. We see that. The pattern's lower highs, lower lows. Okay. The market is fighting at the 18-day average of closes. If you don't see that, I give up. So let's define this. Trend down via lower highs, lower lows. My idea is you take the swing line and you filter it. If the market is underneath the 18-day average of closes, the bias is down, which is one way of saying all signals, these two at least, are go. You're looking to be short. Potentially 44.86, the 18-day average. The stop would have to be to not break the pattern, not take out 45.20. That's the number you'd not want to see because 45.1975 is the high so far. Okay, I get all that. What's the potential? Well, you've got the 100-day average all the way down here, but we don't seem to go there on this chart. We also have back here the 200. So where does the market go down to? Well, if we add the Bollinger Band, tra-da, that's the zone the market likes to correct to. I get it. So the 44.32 level could be where the market heads down, and we're getting a bounce. We had been, and I think you'd agree with me, very oversold. We were making a reach to get to the Bollinger Band. Didn't do it. When you don't do it, you run back to neutral territory. Hey, I need help. And that's up here at the 18-day average, and that's what I think the market has recently done. Got it? September's often a down month. Have that drilled into your head. I didn't think it was going to be that way. I admit it. I changed my opinion. In the Nasdaq, same thing. Lower highs, lower lows. So now let's assume you want to negate the downtrend. You've got to take out 15,524 and a quarter. However, let's assume you do that even tonight. So you'd have a lower low and a higher high. What is that? It's not an uptrend. Actually, I could take this red arrow and I should have moved it right there. That's where it belongs. Momentum, sort of flattening out. Is there a compelling reason to be short? Well, if you've got to be in every day, the pros are probably selling this 18-day average with a stop over that number. Do I like it? Well, that's still going to be a 40-point risk. No. That's an awful lot of risk. In the Dow Jones, I believe in what I teach. You hit the lower Bollinger Band and the 100-day average in an oversold condition, take the enhanced Bollinger Band course. Look at the percentages of not following through to the downside from there, and you're getting a bounce. It's not a trend change, it's a bounce. But I think the pros took their money off the table, and now they'll be looking. Could they be waiting for Friday? Could they be waiting for God knows what? I don't see it. But do you see anything bullish on that? I don't. I can see reasons not to be short, but I don't see anything bullish. Russell, the same thing. The market is now, you can see the resistance. It's the 100 in green, the 18 in the red. Those are your resistance points. Should the market decide to break, I'd look for the market back here, 2189. To have an off, let's call it 2189, just to have a major amount of support. Let's assume the market just goes up and takes out 2253.20, goes through the resistance. You'd still have a lower low, higher high. In plain English, I see nothing on these three charts that throws out a buy signal. I was telling traders that I thought the pros want to sell and sell bad. Calls against the upper Bollinger Band, it just didn't hit it. It got close, but you missed it by 18 points or something, 20 points. Where do you think you're headed back to? Right to the safety zone. That was what I was looking for. And this is still in an uptrend. So if this is still in an uptrend, somebody's saying to themselves, okay, we can get that noise to the upside in stocks, but they're still what? They're still driving this market higher. The higher it goes, obviously that's typically bearish, the stock market. The lower, the more bullish the stock market. Tell me what we did here, my flying friends. This is yesterday, Tuesday. Today you went up to kiss it again and you came right back down. I'm going to repeat the enhanced Bollinger Band course. I want to make this clear. I am not sitting here hawking a $60 or $70 course. I am teaching what's taught in that course. This is what you want to learn, I think. You don't have to. But that first hit of it, the high percentage money is people are coming out, not in. That's still what I think. 10-year notes. What about the trade? They're probably buying. I know you're going to go, they're buying. Well, the trend is up. The support's right here. You'd have to take out this low. Let's come right to it. That low is 133.02 to break the pattern of higher lows and higher highs. And since the market has got that and it's staying up here right at that 18-day average, yeah, that's where I think they are. Let's assume it's taken out. You then have a higher high and a lower low. No trend. That's what I'm seeing right now. Dollar index in the middle of no man's land, stuck against the 18-day average with a higher high, lower low, and flat momentum. Okay? Then we come to the eurocurrency, which began its decline from the upper Bollinger Band back to the 18-day average, line in the sand, and just drifting right here. Are the trade people going short? We're not closing under that 18-day average. Today, you finished at 118.28, right on for all purposes the 18-day average. I don't think you've triggered the sell signal yet. Close under that, you trigger it, and then you open the door for wherever that lower Bollinger Band is. British pound, what did you do the first time? Right here that I teach it. Kaboom. Market in an uptrend, gets up there, overbought condition, and look at how the market is trying to retreat to the 18-day average, but it's looking good. Not bad. There was a reshuffling of the cabinet today by Boris Johnson. That'll give him a better cabinet for him to work with. What about the U.S., the UK, getting together to give Australia a nuclear-powered sub? Now, you might say, well, so what? I didn't say nuclear weapons, so what? You do realize we have not given away in 70 years our nuclear technology to anybody. We keep getting asked to do it. Think of South Korea, others. Nobody. We gave it to Australia. We're giving them the sub. Why? Think of the word China. Need I say more? In Bitcoin, lower low, higher high. There's no trend here. You got and broke the trend yesterday. We talked about that. This is how the market was oversold into the Bollinger Band. What do you think the pros did? You know, when you look back at this, it's easy to look back, but you have to know what you're looking for. Now, this is important. Suddenly, there's a crack, whereas the Brent is losing to the WTI. Hurricane Ida, Nicholas, yes, giving a bid to that. Look where the Brent went today. What do you think I'd say? Let me turn over here. What did Ira say? That's where the pros probably came out. And because it's embedded, I think they'll buy the break. But that's where I think they came out of a chunk of their position. What about WTI? Embedded. Where did it go? Where do I think the pros did? Same thing. Now, you are embedded in heating oil, and I've switched. Remember, I'm not following gasoline for you here. This is where I think the market's got its power. Lose and get the red lines under 80 in these markets, then you get your correction in them. Differentials changing in the spreads, I do see. And look at nat gas. Can you believe this? What a powerhouse trade. It's too expensive for you to chase. If you chase it up here, you're just begging for a normal correction to throw you, and you're in too late. You either got in when you had to get in, and on my morning ETF, the traders there are long this market on this break about right here. On the ETFs, not in this. They're in UNG, and they've been riding that. So I'm very pleased with that if they took the trade that we talked about. Which brings me to what I do in the mornings. You know, I put out 2 videos for 2 different types of traders. I have both ETF traders that follow me, spider traders, and regular stock traders. I cover all that in one video, and in another video, all the futures markets. So why? Well, first, we know that a lot of the ETFs are based on the futures. What do you think? DIY, SPY, and go on and on. They're all based on that. What about the currency ones? What about TLT? You've got to understand where they're at. And yet the futures, you want to get a good idea. So at 5:40 every morning, I try to start recording my video. I'm going to give you both the fundamentals, the day's reports that are due ahead, what time they come out, market expectations for the U.S. markets. I'm going to cover all these markets for you in this exact same way each and every time. On our website, there'll be a scroll bar that you pull, and it lights up. I'm in metals. I'm in grains. It tells you exactly where you're at. So if you want to quickly move around, that's it. Each video's 17 to 20 minutes long, typically. Recently, they've been about 16 minutes. I look every day to see about where I'm at. And I really give detail. And then I'm throwing out what I think the trade recommendation should be. If you're looking for a guy that wins all the time, I'm not him. It's just reality. If you're looking for a pro that's been around this, money management, we'll have losers, we'll have winners. It's equally balanced. The key is control the losers as best you can, let the winners take care of themselves, and do the same quote unquote right thing each and every time, which is the hardest thing in the world because you inevitably want to break your own disciplines, don't you? But you don't have to follow me. What if you use this for your own trade ideas and you say, you know, I want to buy Apple, I want to do this, what's Ira saying on those charts? That's where you get it. So all these come in here, plus individual stocks. And I rotate what I'm covering for you all the time. I do take emails from you. I listen. If you want something added that's got good volume to it, I'll add it. But nothing too esoteric that people really don't follow just because you have an interest in it. Does that make sense? I hope so. It's inexpensive. At the end of the day, what you're getting is 24 videos a month, every 30 days, about a month, on each of these, the futures and the SPDR ETFs, each 16 to 20 minutes long average, each with specific recs, and 4 of those videos from each category will be weekend editions where you get weekly charts. Even when I go on vacation, I'm pretty good about putting these out. So I think you'll find that you get a lot for your money. To find out more, go to our website under the word research. If you want to learn this embedded reading, what do? Go under education there. I'm Ira Epstein. You have a great day.